Calm down before you stress up the groove. The energy a little different when the blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you. Because I stand tall like I'm on my tiptoes. Baby, you think a little too small.
Good morning, everybody. You're watching SmallCapSteve Live. I am SmallCapSteve. We've got a big guest today, Adam Berk from STEM Holdings, and also Coinbase. It's going public this afternoon via a direct listing. We're talking about a company that did $500 million in adjusted EBITDA last year, $3 billion in operating cash flow. You know that gets SmallCapSteve all hot and bothered. So buckle up. Got a big show for you. Let's get started.
Please carry on, but please don't mess up the mood. Yeah.
Adam Berk, thanks for joining us today.
Hey guys, how are you?
We are doing pretty good, I think. I only talked to Jay for 5 minutes this morning, right before we went on air. How are you doing, Jay?
I'm good. I got to my coffee before market open today, so I'm doing outstanding.
Well,
that's the highlight of my morning over here.
So Adam, we don't get to talk as frequently as I would like. You've always got great sort of hot takes on what's happening in the space. I've always been very attracted to STEM because it gets into that talk about sort of platforms and the ability to sort of think differently. You know, in the early stages of the cannabis cycle, everybody was talking about planting flags and, you know, doing the full vertical in every state. You're kind of more focused and you are doing a little bit of that, but you're kind of more focused on the sort of technology side and the delivery aspect. And then it's really timely that to have you on with everything that's happening with Uber's CEO's recent comments. So let's start with the latest at STEM, and then let's move into sort of what you think Uber is as a threat to you.
Sure. Once again, I want to reiterate, I think it was perfect timing that we acquired Driven Deliveries. It seemed like right in the middle of the pandemic, buying behavior completely changed for all consumers. Once again, regardless if you were buying cannabis, toilet paper, shampoo, it didn't really matter. So I think we pounced on that at the right time. The integration has been going ahead of schedule. We are completely integrated as it relates to accounting and back office functionality right now. The delivery business in California is up drastically. We're doing over 1,000 transactions a day currently. We're onboarding new drivers every single day. And since I've taken over as one consolidated company, we now have over 1,000 SKUs in California coming out of our 3 non-storefront retail distribution hubs. We've onboarded about 30 companies, new companies or so, 30 new brands. Very proud of that, very excited. It's all about building relationships and giving the consumers what they want. We will continue to implement e-commerce and delivery as we continue to expand across the country. The next expansion state, which everybody already knows, is going to be Oregon for us. Over the last 2 months, we've been building the API directly into the state-run metric system to make sure our track and trace is accurate. That should be done probably within the next month or so. We've already onboarded 9 drivers in the market. We're working on all of our branding and merch for Buddy, and that will be the e-commerce branding that we'll be launching in Oregon, and that will be next month. So once again, we are so excited about e-commerce and delivery. I truly believe that that is the future in cannabis, because who wants to leave their home to go to the dispensary? Not most people. They love the ease and convenience of delivery directly to their home.
Mm-hmm. So the state that's been sort of all over the news media recently, with 1 second here, let me close that. With Gage went public, and there's been a whole bunch of headlines in the state is Michigan. So I know you guys were working on some sort of deal structure in Michigan. What's the latest on that?
We love Michigan. That is going to be one of our expansion markets in the not too distant future. We should have some good updates coming out in the next 30 days or so that we'll be able to talk about. Right now, still in some development work there, but we love that market. We love the Midwest, right? So to me, that's a hotbed. That's a great market for e-commerce and delivery, and that's going to be one of our target areas.
Okay, and there also was an announcement with Red, White, and Bloom. We haven't spoken with you since you announced this. What's the goal that you're trying to accomplish with Red, White, and Bloom?
Yeah, so and this is once again, I think a great representation of our strategic partners and how we get deeper in the state. But once again, a lot of this is driven by customer demand and by vendor partners that need access to the consumers that are on our database and on our portal. So Red, White, and Bloom came to us. We have a great relationship with them. Currently, they were only in brick and mortar. They came to us and said, look, we'd love for you guys to launch our Platinum Vape brand through your e-commerce delivery platform in the California market. We would love to have access to your database, to your consumers, to the people that are buying day in and day out. So we've launched them. It's been a great success. We've onboarded a few SKUs. We'll get deeper with them in California. But what's great about Red, White, and Bloom, which everyone knows, is they have a really nice footprint. So not only will we get deeper with them in California, but we will look to partner with them in other states. As everyone knows, they acquired a Florida license recently from Acreage. They're deep in the Midwest. So we will get close with them. We'll continue to build our relationship with them.
Yeah, that's interesting, and they were also really big in Michigan. So is there any talk of sorry that I keep bringing up Michigan, but I know that's where like the majority of their operations are sort of placed right now, based on their news filings. Is there a plan to work with them in Michigan?
For us, Red, White was a great strategic relationship for us. We wanted to get it right in California for them and vice versa, for them to get it right with us. Once again, everything's on the table. So, we'll look to expand our platform with them wherever we can. Once again, we have a good relationship with that crew, and we love what they're doing. So we'll get deeper with them as we continue to expand throughout the country. We wanted to make sure the technology integrated. We wanted to make sure that we were delivering to them the data that they were looking for, plus the sales, right? They want access to 92% of the state, which is exactly what we're giving them access to. So now their consumers can buy in real time. Their consumers, and they don't have to wait for the product to sit on shelf, right? It's out the door the second it comes in.
Okay, so let's talk a little bit about the CEO of Uber. As I mentioned briefly, he was saying that they might get into cannabis delivery, which sort of sounds a little bit like the STEM model. How do you consider Uber to be a big threat? Do you think that it's sort of just lip service from a CEO who's maybe trying to get a little bit more attention on the stock? What was your take on that?
Yeah, I mean, look, it was a very interesting comment. Clearly, Uber and Lyft are both entering and have entered the regulated delivery business. Uber on the side of the acquisition of Drizzly, they will get their feet wet in understanding what it means to be in the regulated delivery business. Lyft has a pharmaceutical delivery business that they are in the process of implementing, which will grow, we believe, over the next 12 months in a very aggressive manner, both regulated but different, right? I think that Uber does have an interest to get into cannabis. However, what the general population doesn't necessarily realize is you can't just get into it because you're interested in getting into it, right? So the first thing is every state has a licensing model. So even when it's federally legal, you're still going to need your state cannabis licenses, which aren't easy to get. Otherwise, we would all have licenses in every single state, right? So there's either an application process if it's open, or there's moratoriums in most states, or there are closed limited license markets, as we all know, right? So that's number one, you need a license. Number two, you need the infrastructure, right? These have to be W-2 employees. So in California, W-2 employees. In Oregon, not only are they W-2 employees, but they also need their state cannabis workers permit, right? So they have to take a test and be attached to the specific license. So you can't use a 1099 model. The next piece is the cars have to be outfitted with a hardwired GPS tracking system and a lockbox to put the product in, right? It has to be secured. So once again, a lot of the independent contractors for Uber and Lyft don't have lock boxes. They don't necessarily have hardwired GPS tracking, and these drivers aren't licensed by the state with a worker's permit. So it's going to be a lot more difficult than to just get into the business because you want to get into it. Now, this is another rationale and reason why STEM is continue to invest in our infrastructure. We will continue to grow, not only in the states that we're in, but we will get deeper throughout the country. And I think that the Ubers and the Lyfts of the world will be looking to companies like STEM Holdings, driven by STEM, to make an acquisition, right? So we are going to be in a really good position to become a strategic for large delivery type companies that have massive driver networks, because they won't just be able to get in because they want to.
Okay, that's a great answer. So you also are looking at when you guys look at entering a state, are you looking at it from like the whole vantage point of how can we build out our sort of driven delivery platform, or are you looking at it from the vantage point of what makes sense from a revenue and cash flow standpoint?
Actually, both, right? So we always start with, can we make it a profitable market? That's number one, right? Because if you can't, there might not be rationale to even go to that market, right? So that's definitely number one. Number two is the demand there for e-commerce and delivery? Wholeheartedly, we know that demand is everywhere, right? It doesn't matter what state you're in. People want products delivered to their home. They do not want to leave their house. So we will start as we expand to these markets with e-commerce and delivery, whether that is a brick and mortar that we're able to do delivery out of simultaneously. And then behind that, we'll bring in our other branded products to move all of that up the chain. So once again, e-commerce and delivery, we want to make sure that the market is a profitable market, and we'll continue to expand and invest in the infrastructure inside that market to get broad inside that market. And then once it makes sense, then we will look to bring in our cultivation brands, our edible brands, our own wholly owned brands.
So from a regulatory perspective, how difficult is it to do delivery in most of these states? Like,
Very.
I imagine a lot of states just don't want it at all. How does that impact you? And I mean, is there much competition right now?
Yeah, so I would say that once COVID happened, the states were actually very understanding with e-commerce and delivery and curbside pickup, right? There's been a major shift to that. Every industry. So the states were very understanding. They understand social distancing. They understand people are afraid to be around a lot of other people in close-knit dispensaries, or online outside of dispensaries, right? So they were very understanding. The states understand that this is an important part of the industry. It is very hard, though, to build a tech stack from the ground up, to build out your driver network, to have fleet management, to integrate and build an API directly into the state-run systems. All of those components are very difficult. That was why we bought Driven instead of built the platform from the ground up, because I just felt like we didn't have 2 years to start building out technology, right? We want over the next 2 years to build our adoption rate and get deeper inside these states than worrying about, is this technology right to launch? So I think the states want delivery and e-commerce as long as it's done in a really good regulated and track and traced way. The consumers want it. And then the last piece that I think is very important is if we have some change as it relates to safe banking later this year, that will then allow us to have credit card processing. And at that point, that's a game changer, right? Because at that point, people don't need to have cash in their homes to pay the driver, right? Or a debit card to pay the driver. They'll be able to utilize the credit card. We believe the basket size will increase, adoption rate will increase over tenfold. And that's another reason why the Ubers of the world aren't going to get into this right now, because they don't have a cash management standard operating procedure or bank accounts set up that are cannabis-specific bank accounts, which is how we're set up in all of our states.
That's a really interesting point. So right now on your delivery system, everybody who's purchasing cannabis products, they're either using cash or debit?
That's correct.
Okay.
I think that's interesting as it relates to basket size. I'll be honest, that's something I never ever considered.
Yeah, let's bring up some of your numbers here.
Yeah.
So this is from a corporate update you guys put out. I think it was
A couple days ago.
Yeah, a couple days ago. Maybe if you could walk us through these here. We've got total dispensaries 185. That means the total number of dispensaries you guys have products or relationships with. Is that?
Yeah, so that's the number of dispensaries that we're selling our branded products to, whether that's Travis and James, Carnivore, TJ's Gardens, or Yerba Buena.
Okay. And then units sold, that's just whatever products you guys have sold to dispensaries.
Correct.
Okay. And transactions. So that's
number of transactions that occurred within the quarter of our own that is coming through our own dispensaries.
Okay. Average order size $58.28. Now, some of this is at or is everything in cash and debit?
Yeah. At the dispensaries, okay. Cash and debit as well. Yep. So once again, that's what our average order size is at our own retail.
So I mean, that's a big jump, 33% over 1 year. Why is it that your average order size jumped 33% in a year?
Yeah, so a few things. I think that the price has jumped twofold. One is our dispensaries are now stocking more top shelf products, right? People have had a demand. They've moved away about a year ago from, more value products to more premium products, right? So, and it's really only, although it's a large percentage, it's only a few dollars here, right? So I think that that's very important. Also, when consumers are coming to our retail shops, they're making larger purchases because they don't want to come back every single day, right? So they're buying now for a few days, which is very important. And they're being upsold at retail as well. So maybe before, a consumer might only have bought flour. Now they're willing to try a package of gummies or hard candies or caramel chews or add an additional pre-roll to an eighth of product of a specific flavor that they might want to try. So people are trying new products now, and I think that's why the average order size has increased. Those threefold.
So with respect to transactions on the e-commerce side, that 97% increase year over year is standing out to me, obviously. Is that just a result of expanding the drivers and the capacity that you can fulfill thereby, or is there truly just that much of an increase in demand for e-commerce sales?
E-commerce in demand, sales, that's number one. Number two, demand of our new SKUs, right? So we've brought on a lot of new SKUs to our portal, right? So super important. Just like I said, we're now stocking over 1,000 SKUs. So we have the brands that people want. And then the third piece is expanding the driver network, right? So having more drivers, more of those milk trucks, we sort of say. So that's basically the cars that have already stocked product inside of them. Adding more of those to our distribution platform has helped also.
Okay, so how much of these numbers that we're looking at here would you say are organic, and how much of it is a result of the acquisition of Driven?
Well, on the they're all on the e-commerce side, obviously we had no e-commerce and delivery prior, right? Okay. So the e-commerce and delivery growth is, once again, all of that division's growth. And on the dispensary side, remember, Driven had no dispensary business and no brand business. So once again, that is all organic growth as well. So separately, all organic.
Well, that is exciting.
Because remember, they're two completely separate businesses, right? That we're now pushing together.
That's pretty exciting.
And what I also want to say is we haven't even sold any of our own branded products through our e-commerce and delivery platform yet, right? So we just delivered about 2 weeks ago Yerba Buena in California, which is our own branded product, to our distribution centers. Those are just starting to get into the distro centers and into the cars and on the site for delivery. So remember, that's a whole new platform that we're going to be developing here over the next few months.
So fingers crossed, if I'm understanding this correctly, Q2 could even show stronger growth.
Yeah, I mean, I don't think it's going to show 97% growth, but we're going to definitely have some good growth in this next quarter.
Wow, this is pretty exciting.
Yeah.
You don't see this kind of growth very often.
One other thing I want to say is, I've looked at this in a very interesting and holistic way. We are not only looking at our vendors as partners, but looking at other distribution networks as partners as well, right? So any sort of content providers we're looking to partner with, right? So for instance, an herb.co, a Miss Grass, any sort of these platforms that people are going to find out information, to find out about brands. To us, those are partners that we want to get close with, because if I'm a consumer and I'm going into those platforms to learn about a brand, I want to be able to then buy that brand right from that platform, right? So once again, we're talking to all of these people. We're looking for other JV partners that are out there that are distribution partners for us that we can get close with, so we can give their readers access to buy in real time.
Well, this is exciting, Adam. Thanks so much for coming on today and giving us the update. I'm really excited looking at these numbers of just seeing that kind of growth, knowing that you're doing things in a way that I believe that if you continue to demonstrate this growth, and eventually you have access to either the NASDAQ or the NYSE, and then you get all the Robinhooders and a lot of the institutional fund managers out of the U.S., they're going to be pretty excited when they see a platform that's demonstrating this kind of growth and in a segment that does have a bit of a moat and defendability. So it's nice to see somebody with a smart strategy that's not just following what everybody else is doing in an effort to sell stock, but actually executing. So congratulations on your work, and we continue to root for you over the next couple quarters.
Thanks, guys.
Thanks,
Adam.
Okay, so Jay, let's get into Coinbase.
Coinbase, what do you want to talk about? They make a bit of money. They seem like an all right little business, little boutique firm.
Should we start off with the video that we made on Coinbase, or have you seen it too many times and it's going to bore?
No, play it. Hit the play button.
Well,
I think our video staff truly did a great job on this. I mean, the script was all right. The guy that wrote it kind of ripped off an article that someone else put together and put some time into, but overall, it came together great as a result of our production team.
Okay. Who ripped off the article? Was that a shot at me?
I'm just fucking you. Seeing if you're awake.
I don't even know that I wrote it.
You wrote bits and pieces, yeah.
Okay, hold on a second here. This is 1 second. Okay, my computer's now crashing. This isn't good. Hold on a second here.
Yeah, it looks like you're watching a rave or something.
Hold on. It's off. There we go. Okay, hold on. This is technologies, There we go. Can you see? Is it?
I'm seeing your pretty face right now.
Okay, hold on a second here.
I'm getting it.
Okay, so that means I didn't do it right. Hold on a second here. No, normally we never have these issues. Here we go. Share audio. Bingo! I got it. Okay.
You got it? There we go.
Eventually, we're going to have a live producer who does all this stuff for me, because it's terrible television.
And then you have someone to yell at.
Coinbase is one of the hottest deals coming to market in 2021 via a direct listing. Coinbase is one of the hottest deals coming to market in 2021 via a direct listing. Coinbase is the largest U.S. cryptocurrency exchange and has around 50 cryptocurrencies available for trading. They will be the first major crypto company to go public in U.S. history. The company will trade under the ticker symbol COIN on the NASDAQ. They have seen impressive growth with 56 million verified users and a valuation expected north of $70 billion. What makes Coinbase so unique is that there isn't a comparison that comes close to the cryptocurrency exchange when it comes to the public markets. Recent runs in stocks like Voyager Digital may in some ways be the closest comparable on public markets, who saw close to 1 million users sign up on their platform in Q1 and trades at north of a $4 billion valuation. Normally, when anticipated big tech companies go public, there's always the but they don't make money. This is the rare case we can't say that. Thanks to the recent run and interest in Coinbase, the company is hitting the market with impressive profitability metrics and a growth profile that could make this stock go nutty. In fiscal 2020, they posted $322 million in net income, $527 million in adjusted EBITDA, and over $3 billion in operating cash flow. Coinbase out of the gate is likely a simple bet. If you believe crypto is in a cycle and we are near the top, it's likely not that attractive at this valuation. Conversely, if you think Bitcoin and crypto are part of a new paradigm where demand for crypto will continue to grow, Coinbase offers a cash-flowing investment with a high growth profile that will put it on a trajectory to go much higher. Thanks for watching. We'll see you next time. And in the meantime,
Well, what do you think? What's your take on Coinbase? What valuation would you pay for Coinbase today, Jason?
Well, if you want to go by Canaccord's valuation metric for Tesla of 63 times 2024 EV to EBITDA, it could be pretty high. Not that I'm saying to go by that valuation, but I think this will come out very, very strong. But truth be told, I truly think that it will trade in connection with Bitcoin. Bitcoin goes up, Coinbase goes up. Bitcoin goes down, Coinbase goes down. Whether or not that's appropriate, that's just what I see happening because that's just how markets seem to work with stuff like that.
But you know what? The fundamental difference between Bitcoin and Coinbase, well, there's a bunch of fundamental differences, but
I mean, don't get me wrong.
The biggest fundamental difference is in one case, you have a business that's cash flowing. In another case, you do not. You look at the S1 of Coinbase, $3 billion in operating cash flow. That's the number that I keep repeating. I think it's really interesting. I don't think that we normally see these kinds of things, right? Like,
I'll play devil's advocate a bit.
And I'm going to bring this up for you.
So Ross, well, before I play devil's advocate, Ross Gerber had a tweet this morning basically saying that now that a cryptocurrency exchange is being traded in U.S. dollars, the U.S. dollar is dead, and Bitcoin and Ethereum is the monetary system. Another great take from the biggest clown on the street.
Ross Gerber is the biggest clown. Come on, man. We work at Canadian small cap. I guess that most of the people in our world aren't.
People don't know who works. Yeah, exactly.
Okay. That's fair.
Anyways, I'm gonna play devil's advocate a bit. Coinbase could not have gone public at a better point in time, and the reason I say that is, had they gone public last month in March, they wouldn't have been able to release their Q1 results, and their valuation would have been grossly different from what it is going to be now as a result of those numbers. Coinbase was doing great as a business prior to the first quarter, but the run in Bitcoin and digital currencies as a whole in Q1 2021 it was an anomaly effectively compared to prior years. Now, Coinbase capitalized on it entirely, but even in their S1, they actually bring back things a bit and go, hey, like, this was not a normal quarter. This was outstanding, absolutely. However, they provide like a good, better, best scenario. And even the better scenario, i.e. the middle scenario, it doesn't even have the numbers that they had for last quarter on a go-forward basis in terms of monthly transacting users and everything else. So Coinbase is actually saying, like, this was an outstanding quarter, but perhaps we shouldn't be valued based on this because they're so out of the norm.
So the one thing that I'll say is this. I'm going to say a lot of things, but the one thing in the next 30 seconds I'm going to say. I'm at a loss for words here, just kind of looking at these statements and trying to think like how I go about valuing. But the one thing I'm going to say is this: depending on how many shares, this is going to be a lot like watching a Canadian, issuer go public, whether that's through an IPO or a direct listing, how many shares come at this thing? Because there is so much positive sentiment towards seeing a company that just put out a annual cash flow that looks like this, $500 million in EBITDA. It's all the rage right now with the millennials. There's a lot of positive sentiment on the stock right now that I think, like, you're not playing the valuation game. I think that you're playing the share structure game, and I don't know enough about that to actually really be able to comment. But I'll say this: if there's not a ton of shares that are available in the float, I could see this thing blow to $1,000 easily.
You know, you're absolutely right. Like, we're small cap. We focus on the boring stuff. Share structure is boring as can be, right? It does not get more boring than share structure. However, it's absolutely key in the scenario. There's 114.9 million Class A shares outstanding. If 2 million of those hit the market and only 2 million, well, this thing's going to literally have a moonshot, and that's not a term I use lightly. However, if 50 million come free, it's going to play an entirely different path. So, I mean, you're absolutely right. It all depends on how much paper hits the market. And, I mean, over the next 3 days, if you're smart paper, you're probably hitting the market because sentiment's not going to get better than right now, at least in the short term. Long term, maybe, but it's going to be hard to beat the excitement today.
Yeah, this is
over the next 3 days, right?
This is one of the biggest IPOs we've seen in a long time, and it's exciting. We don't see $100 billion tech companies that everybody knows that are effectively a household name like Coinbase. I know maybe Coinbase isn't quite a household name, but everybody knows what Coinbase is. So
in terms of the cryptocurrency world, it is a household name. Like, it's second to like Ethereum and Bitcoin.
Mm-hmm.
I mean, don't get me wrong, Bitcoin's years ahead, but still.
Yeah. So I mean, I'm certainly on the positive side. I mean, but this turns into a game that we're going to have to see how much selling shows up. That's going to be, and I know that people are going to go, oh, duh. That's how markets work. But I think that when we see this in Canada all the time, when these new issuers go public, it's a game of how many shares are actually going to hit the market. And in this case, there's going to be so many fund managers that just want to have this on their book. But look, I mean, we're also talking about a big valuation, right? Like at $100 a share, my understanding is that the actual like fully diluted share count is actually closer to 261 million. So at $100 a share, we're talking about was it 2.6 billion? And what is the share count actually? Because I just Googled
it's 114.9 million.
It is that sounds more right. That I got that on Seeking Alpha, but now that I'm doing the math in my head, that doesn't sound accurate.
Yeah, no, I actually read the last one.
Okay.
I right now I'm actually looking for prior sales, but here's the struggle for those of us that come from Canada and try to understand the U.S. filings, as they do it different, right? In Canada, I could just search prior sales and know what the share structure is. That's not exactly the case here.
They have it. Look, according to Seeking Alpha, they got it at 261 million shares once you include the Class A and the Class B. So the 130.7 Class A, 685, 68.5 million Class B works out to about. And then once you actually like dilute the Class Bs into the Class A's, you end up with about 261 million.
Yeah, that could be entirely right. I just got. I'll share capital. Let me share my screen.
Let's go for it. Live on air equity analysis, folks. Buckle up. It's going to be fun.
So, I got the 114.9 million from somewhere. I couldn't tell you where. But I mean here. Sorry, it's a bit small. I'll try and zoom in a bit. Oh, I lost where I was. There you go. So capitalization, they got all kinds of numbers here. Convertible preferred stock, 126.6 shares authorized, 112 issued outstanding. Class A, looks like they got 12.2 outstanding. See, this is where it gets weird because in Canada, it's just unlimited authorized. That's always what it is, and then you just say whatever shares are actually outstanding right now. They do things a bit different in the U.S. So I mean, it looks like they've got 12.2 million here plus 112 there plus this 164 in Class B. So Seeking Alpha might actually be right.
Yeah. So at $250 a share, which was the reference price.
Yeah, and I mean, look
That's
at
about
here.
that's about 100 billion, right?
Yeah, 345 per share issue.
Oh, sorry, that's about 65 billion. So at the $450 target that Jim Cramer's talking about, you're looking at about $117 billion. So
here you go. 2.3 million shares of Class A common stock reserved for the potential issuance pursuant to warrants to purchase shares of our Class A common stock that may be approved by our board of directors from time to time. As of December 31st, our board of directors had approved the issuance of a warrant exercise for an aggregate of 230,000 shares at a price of a fraction of a penny. So most of these shares are pretty cheap.
It's a pump and dump. It's a pump and dump. That's Canadian small cap humor for you out there who don't get the joke. Typically, when we see that in Canada, it means that the company is looking to the 1 cent paper is because they're trying to dump it on you, the retail investor.
Yeah, the difference is this is clearly an operating business with free cash flow, which is
the real business.
It's a real business. It's something that's foreign to 95% of market participants. So
yeah, I think the NASDAQ's pretty good like that. But look, regardless here, $450 a share, as Jim Cramer says, about $117 million, about $117 billion market cap. Again, for a company that's generating real EBITDA, real cash flow. I don't know. And then there's also the whole argument of comparing this thing to the exchanges that are publicly traded, such as NASDAQ.
So you know what the problem here is? This quickly is looking like a value stock. Value in the sense of it's a real business operating or generating cash flow and everything else versus the growth story. Sure, can we tell a growth story? Sure, absolutely, in the sense of Bitcoin might go up, but right now value investors are probably interested in this because cash flow like that, I'd like to think at some point dividends are going to come into play. Right? Like if you're making $3 billion in a freaking quarter, you're not dropping all that into research. Right? Like how's Coinbase going to spend that? Truth be told, with a quarter like that, it's kind of surprising that they would go public at all. Solely because if I could split that up against the shareholders prior to going public, that'd be great.
Yeah, I don't know. I'm just looking at a high level. I've actually never even used Coinbase, so I can't speak from a user experience. But 56 million people using your platform, that's a real number. They are effectively the market leader in what appears to be a hot trend. I would say this. Regardless of whether this works out or doesn't, the shareholders and founders of Coinbase have found the perfect time to go public because...
Oh, yeah, it does not get better than this. Like, they timed it perfect. JTD, Coinbase is just NASDAQ, I believe. Symbol COIN, COIN. There is a coin ticker symbol on the CSE. That is not it. I believe that one actually went a bit nutty this morning.
What time is it supposed to start?
This is where I find U.S. listings to be so weird. I got no idea when they're going public. Like to me, like it should be trading already. Like, what's the holdup?
It's riveting. We're sitting around waiting. Yeah. Look, I'm pumped to see how this plays out. He meant in JTD's asking us, are you allowed to use Coinbase if you're Canadian? I don't know. That's a good question.
I have had a Coinbase account.
Oh, you're one of the 56 million.
No, not an active user. I can promise you that. It's been like 3 years. That was back in like 2017 when crypto first had strong run. I don't even know what my username and shit is anymore. I just remember transferring money in and going, I'm probably not getting this money out. But that was the risk at the time, right? I mean, how many exchanges blew up since 2017?
Yeah. So Coinbase is valuation $100 billion. If this is what we're all kind of looking at. This is a tweet here. Let me share my screen. From John Ehrlichman.
Still waiting, buddy.
Hold on here. I'm pulling it up. Comparing valuations, Coinbase $100 billion, NYSE and NASDAQ $93 billion combined. Let's give this a listen.
And value of the New York Stock Exchange and the NASDAQ, and this for a company that didn't need. And one of the driving forces this week, the IPO of Coinbase, a fast-growing exchange at the center of the crypto excitement. It's expected to IPO this week at a valuation of around $100 billion. That would be more than the combined value of the New York Stock Exchange and the NASDAQ. And this for a company that didn't even exist a decade ago. It started in a San Francisco apartment in 2012. Now, the IPO will bring even more attention to the world of digital money, and we know the attention has been far-reaching this year, whether it's institutional investors, a lot of deep-pocketed players who are now curious about cryptocurrencies, or the corporate customers. A lot of people pointing to examples like Tesla and Square and MicroStrategy investing in Bitcoin for corporate purposes. And one of the forces.
Okay, and that's enough of that. You know what I like about Coinbase though is it's pretty interesting. It's pretty simple. It's how would you describe the business model of Coinbase to a 5-year-old? Your volume's off. Your mic's off.
Sorry. I've been doing stuff in the background. To a 5-year-old, it's where you trade Bitcoin. I wouldn't even say digital currency or anything else. Just Bitcoin, because that's what someone can understand.
This is part of the reason, though, that see how simple that was to explain. It's an exchange where you can trade Bitcoin. It's where you go to buy and sell Bitcoin. It's the marketplace, and it's the best one. It's the biggest one. Investors tend to like simple ideas, right? We talk about it all the time. Cannabis did well. You grow a plant, you process a plant, you sell a plant, and there's a big legalization event coming, and there's big demand for said plant and said plant products. So investors, they went goo-goo. They went goo-goo over it. Same thing with Coinbase. It's simple. It's a hot time. But this is going to be very. I am pumped to just sort of see how this is going to trade on the first day of trading. And get ready, folks. We've actually had some interesting Canadian companies like Voyager. Let me pull up the chart on Voyager here.
So
I almost bought Voyager at 90 cents, by the way.
Yeah, I know. You told me to buy it as well, and we both didn't. I want to point something out. Revenue for the New York Stock Exchange, which trades on symbol ICE, Intercontinental Exchange. Wikipedia quickly, because I hate Edgar, is saying that they had revenue of $8.24 billion in 2020. So the whole notion that Coinbase being valued more than the two exchanges combined, truthfully, I think that's a bit justified. I mean, Coinbase came out of nowhere. March, for the most recent quarter, ended March 31st, they did $1.8 billion in revenue. So you're already 25% of the NYSE. And Bitcoin may just be getting started. This is where the speculation comes in. If Bitcoin goes to $100,000 yet this year, or continues higher, the expectation is Coinbase's revenue is just going to skyrocket with it. And it's already well on its way to meeting that of the NYSE. So, I mean, to me, it's not absurd that it's going to be valued higher.
Yeah, what I find kind of interesting about this whole, I shouldn't say interesting, but ridiculous about this whole conversation is probably the better way for me to put it, is that we don't know. Bitcoin the stats are somewhere. Forgive me if I get this wrong, but there's like a very, very high percentage of the actual Bitcoin is held by a very, very tiny number of addresses. And that
So
boils
it's just like the stock market.
Yes, but I don't think anybody knows who actually holds it. So at some point there could be, the quote unquote dump, and that is kind of scary if you're if you are a institutional portfolio manager, and I am not. My question for you becomes how bad do you look if a day comes where one of these people just dump a ton of paper and this thing like sinks all the way down to $4,000. You think we're past that point?
Depends how much a single person holds. It's like anything, right?
Mm-hmm. Mm-hmm.
To Cody's point there, yes, but those millions of users don't hold individual Bitcoins themselves. They hold fractions thereof. We know that there's several accounts that have several Bitcoins themselves, which could cause an easy crash, right?
Yeah, we had a conversation with Mike McClone about this, who follows it, and he was and he's a big Bitcoin bull. I mean, he's saying it could get to $250,000 this year, and Mike was of the mindset that is like a significant risk. If
that were to happen, in the sense of Bitcoin getting to that ridiculous valuation, Coinbase honestly would blow past the NYSE, at least in terms of revenue numbers, right? I can see a strong path forward for Bitcoin and everything else, which inherently has a path forward for Coinbase. I struggle with the current valuations in the market as a whole, though. So I don't know how much more revenue the NYSE could generate, in the sense of we had a record year last year, and they're doing the same.
Good point. That's a good point.
We had a record year and they're on the same run rate, right? 1.8 billion, call it 2 billion, over 4 quarters is 8 billion. Well, you're now at the same level as the NYSE, and then NYSE is at all-time highs where it'll struggle to get further and further and further. Whereas Bitcoin, arguably, I'm no fan of Bitcoin, to be clear, but arguably Bitcoin may be just getting started. Everyone can easily see how it could double from here, despite the chart being straight up. It could go the other way too. Don't get me wrong. I'm not saying to go out and buy it by any stretch. I'm very much neutral at best on Bitcoin, but it's a ripsaw, right?
We do hit a point though where the institutions that are going to get in. The institutions that won't get in will remain on the sidelines, and then the price gets so high that it's going to take a lot of buying to push it higher. Like you get to the point where the next shoe to drop in order for this thing to keep going up is central banks have to start buying it, right?
Well, that's just, truth be told, that's the same thing with gold. You and I are big gold bulls, but how much does retail have an impact on gold at these levels? Mm-hmm. They have some, don't get me wrong, but it's not like the impact that retail had on Bitcoin at 20,000.
We almost covered Galaxy Digital, and we had like 4 conversations with the management team here back
when they're like $1.
Yeah, this was back. It was when it was it was like April, May, wasn't it? When it was under $2, and now it's $39. And we were like, there were these Goldman Sachs guys, and none of them could explain what Galaxy does. Perhaps I'm just not smart enough, and I don't think you were getting it either, Jay, because like he was like trying to explain it to me in buckets, and I was just like, I don't know how well this is going to work out. And like, if you go and you look at Galaxy's statements on CDAR, it's actually just like a 19% position in a company called Galaxy that is publicly traded in Canada, which they actually took public to sell shares and so that they could pay their tax bill, and thus not actually have to sell any Bitcoin. Kind of a brilliant strategy, I suppose. But yeah, in hindsight, seeing how much Galaxy and I always knew that, right? Like my assumption always was that if I wanted to play Bitcoin, I'd find equities that would give me that sort of leverage, that if it goes, it goes, if it doesn't, it doesn't. And obviously, like, you're going to get hit if there's down rounds and dilution. But Galaxy's a name that's obviously done exceptionally well. And the other one that I got to really tip my hat to here is Voyager, who and someone, it was actually our broker mentioned this, and I'm just pissed when I look at this. He mentioned this to me at 90 cents. And
you know what? I think it still dipped after 90 cents. And we said, maybe later. Well, that maybe later ain't happening now.
And you know what really irks me about this one, Jason, is that I knew, like I was told, this is from the guy who started E-Trade. It's like, if anybody understands,
I didn't know that.
Yeah, and that's when like normally when people pitch me stocks, like one of our brokers, I just roll my eyes. I'm like, another pump and dump out of Canada, great. Look, this guy started E-Trade, and we were so caught up in gold juniors. Like this is a guy, he understands customer acquisition. He understands how to build out a platform. And look at the numbers Voyager's doing right now. It's silly. This company is already printing money from 90 cents to $30. It's probably actually a pretty good buy now, quite frankly.
Not a recommendation.
No, I don't know any. They're not a client. They we have no position. This is the one trade that got away from me in the last year that I regret. And the problem is that whenever these things get away from you, like this thing didn't just kind of get away from us. This thing just like
knocked its socks off.
Yeah. I was looking at 90 cents. And you know, the stupid part of this is the part that makes me feel really foolish was when I was looking at it at 90 cents. My psychology at the time was, oh, well, look, a few months ago, I could have bought this for 20 cents.
That's exactly what I do too.
And that is that is the part that really makes me kind of think. And there's just like, you don't want to think too much about that because then you start chasing stuff. If we really want to get
that's exactly what our frequent viewer JTD just said. I don't know if you saw that. He made the same mistakes over and over again, overthought trades because the financials didn't make sense. Yep. That's happened to me more than one occasion, and honestly, I can promise you it's going to happen again.
but how often do you see the guy who founded E-Trade in a Canadian micro cap in like a space that you like? Because
all I'm saying is that we rely on management all the time, absolutely, especially in the mining sector. However, betting on people and their past experience doesn't always play out. Iantis is one example. Yeah. Right? Sometimes it just goes completely the other way. So it's a good thing to have, but it's still not a guarantee.
And I mean, we've made some money off a couple of these. Like we made some money off Digi, which it's hard to be a big believer in Digi after they announced that big financing with H.C. Wainwright. I mean, that's just so much paper.
Actually,
chewed through.
If you want to pull up NDA this morning.
And what is the stock NDA?
NDA, yep. That's the symbol. Neptune Digital, yep. This is exact. I might get a letter for this, but this is exactly what happens when H.C. Wainwright comes into these digital names.
H.C. Wainwright doesn't give a shit. They just want stocks to trade volume.
So this thing closed at $1.88 yesterday. This morning they announced a financing at $1.35 with a warrant at $1.75 after closing at $1.88 yesterday. This thing just got rocked. I don't know how H.C. Wainwright does it, but there's very much a trend of they come in and these names just crash right after. I don't know if it's because there's different hold periods somehow or something.
No, it's H.C. Wainwright does free trading paper.
So I mean, like, it's one of those things.
There's like an actual like regulatory way that they do it
because they're U.S. Yeah, and like here's the problem: you're offered $40 million at a price that your equity was not at a week ago. What's the best thing to do? It's not an easy conversation.
So here's sort of the thing, though, right? Like in the case of DigiCrypts, I'm just gonna say this, and whatever comes back against me, but that was a down round. It was a very tiny down round, but it was a down round.
Yeah, I mean, I'm not denying that. I agree with that. I'm just talking about NDA this morning. Like, can you pull up that chart again?
You got it.
So your layout was changed. So
I'm new to using charting software.
This time last week, they were not at $1.88, and they were at that $1.35 mark. They were offered $40 million. Last week, if they were offered $40 million at $1.35, actually, it was lower than that. They were under $1 this time last week. I can see why you take the $40 million. One, you don't know how long it's going to last. Two, if in 2 months you're trying to make payroll and you can't, and you turned away $40 million, you will be burned at the stake, right? Like, H.C. Wainwright is not dumb for what they do. I fully understand why they do it, because how do you say no, right? Like, yes, you have a duty to your shareholders, but you have a duty to your shareholders. If you can take $40 million, how do you say no, right? Genuinely.
It's a good question, but I think that the problem is that when you have a big retail following who have all been buying the stock open market, and they just see that you just gave out a bunch of free trading paper at the same price with warrant coverage, you can't help but feel. Like
I agree.
But that's public markets, right? When you buy a stock open market, you don't know. The company could turn around and do a financing at a discount with a full warrant, and you're pissed off. But that's it sucks when that happens if you just buy shares.
It's a catch-22. Either way, there's going to be people pissed at you whether or not you take the money. It's truly just how it comes out to, right?
Okay, so let's wrap it up quickly. What else do you have going on today?
Today on the dive, we actually have, I'm going to say his name wrong, Frank Dumas
for St. George Eco Mining's
St. George Eco Mining and Zoo,
some blockchain deal that was originally had some crazy valuation on it a couple of years ago. The company has a big following, so we said, okay, let's with Frank.
Not a client. No, we have no holdings whatsoever. It's just there's a lot of interest in the name. So I mean, you serve your audience, right? Mm-hmm. So he hops on, talks about battery recycling for electric vehicles, some blockchain, some of his lithium aspects, everything else. It's good.
Okay.
And who do we got on
tomorrow?
Who do we got?
Was our producer Chris around? No, he's not. Here, let me pull up my calendar and I'll tell you. Give me 1 second. Tomorrow we have Frank Holmes. We got Frank Holmes on tomorrow. Jeez.
Really?
Yeah. Should have Frank Holmes on today to talk about Coinbase. Get his thoughts on that.
Well, I think my daily dive for tomorrow is Frank Holmes too, so I'm going to have to smack my producer around a little bit.
Yeah. Well, geez, Chris. Get with the program, man. Okay, so listen, everybody. What we talk about on the show is not financial advice. Nothing is a buy or sell recommendation. We're just a couple of ding dogs having fun. This is entertainment. If you are a masochist enough to watch us, you're here for entertainment. Not financial advice. That's not what we do. We're not licensed. You're looking for that sort of thing? Go find somebody who's licensed. Look, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. For that, I appreciate each and every one of you. We will be back tomorrow at noon with Frank Holmes. Thanks for joining, everybody.
Wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the